one way to look at the US, and I might have said this last year when I was here, is that there have been two very strong headwinds facing the US, two big drags on growth. The good news is those are diminishing. And we now also have two quite strong tailwinds that are helping growth. So let's look at each of these very quickly. The two headwinds, the first, private sector deleveraging. We went through a huge debt bubble. The households, banks took on too much debt. They were highly leveraged. And so they are in the process of cutting that back. They've made substantial progress in that regard. They're almost back to where they were in terms of debt levels to before the crisis. So the good news is that adjustment is behind us. And so the reduction, let's say, in consumer spending growth or in bank lending that was part of this deleveraging process is also behind us. The second headwind was fiscal austerity, big time. It was done in a very, very bad political way in the US, but the good news is progress has been made. We've stabilized the debt ratio in the US. The ratio of federal debt to GDP has leveled off. It stopped rising. So we've made progress, and fiscal austerity this year will be far less than it was last year. By our estimates now, looking back, that fiscal austerity, that tightening, that increase in taxes, the sequester, all of these things that happened in the US on the fiscal front reduced growth last year by a full 1.5%. So without that, US growth would have been about 3%. Good news is this year, it's going to be a lot less, maybe a couple of tenths in terms of the impact of any further austerity on growth. So we've got two major drags on growth that are basically going away. And then we've got two really strong tailwinds, and we've talked about one of them at great length at this conference in the past few years, and of course that's the unconventional oil and gas boom, and it has had huge impacts on the US economy. It's, by our estimates, generated 2 million new jobs in the last 5 years, probably another 2 million in the next 5 years. It is a competitive stimulus for a lot of industries, including the chemicals industry. I mean, you know the statistics. Natural gas prices are a third of what they are in Europe, a fifth of what they are in Asia. Electricity prices, half what they are in Europe. All of these are great, great advantage, competitive advantage to many industries, but especially, of course, the chemicals industry. And then there are other benefits that come from it. We used to worry so much about our trade deficit being huge and unsustainable, and it was, but it's going away. Why? Because we're importing a lot less oil, a lot less energy than we were before. A lot less. So from that perspective, a lot of benefits that are coming from the unconventional oil and gas boom, and that's a major tailwind, if you want to say it that way, a major boost to the US economy. This is very, very good news, obviously. Second piece of good news, a little more controversial perhaps, is that the fact that the Federal Reserve has accommodated growth, has helped growth in the United States. This program that they went through, 3 rounds of it, called quantitative easing, which, by the way, means, for those of you who may not be that familiar with that term, it essentially means that the Fed was buying long-term government bonds to reduce long-term interest rates, to help housing and other kind of financing. And by our estimate, it actually worked and worked fairly well. Now, what is the Fed doing? It is tapering those bond buying purchases. One way to look at it is the Fed is not yet stepping on the brakes. What it's doing is it's gradually taking its foot off the accelerator. It's still providing stimulus because it's still buying bonds, but at a slower rate than it was just a few months ago. And that process will go through this year. So the Fed will continue to be accommodative, but just phase it out. In terms of interest rate hikes, despite what Janet Yellen, the new chair of the Federal Reserve, said last week, she made a bit of a slip in a press Q&A, despite what she said. I mean, she implied somehow, or people interpreted that she said that interest rates might rise in a 6-month horizon. We doubt very much that's going to happen. We think that the earliest that the Federal Reserve is going to raise interest rates will probably be sometime early next year. So again, the point here is that monetary policy in the United States is going to remain fairly accommodative, and therefore the environment for growth will be pretty good.